Portal launch. We are so glad you carved out time to be here with us today. My name is May, and before we get the ball rolling, let me quickly set up the stage so you know exactly what we have in store for you. To open things up, we'll be hearing from Ini, the co founder of PropTech Buzz, who will walk us through a brief but impactful look at PropTech Buzz platform and what today's event is all about. He'll also be getting our distinguished panelists warmed up before we head to what is shaping to be a brilliantly engaging conversation. Now, here is where things are really getting excited. After the panelist wraps up, we go straight into the live demos from our four powerhouse companies who are at the absolute forefront of commercial real estate innovation. We have Reductive, Demogate, Predict AP, and Attest IQ. These are the teams building the tools that help CRE professionals take control of their portfolios, smarter analytics, sharper insights, and technology that actually moves the needle on performance and profitability. The future of CRE asset management is being built right now. And today, you get a front row seat to see it in action. All right, let's not waste another second. Over to you, Ini.
Thank you, May. And hello, everyone. Welcome to, this is the moment we've been waiting for. Welcome to the official launch of the CRE Asset Management category on PropTech Buzz. Close to 200 LinkedIn live registrations for this launch. It's interesting to see how asset owners and property managers are looking to optimize their property portfolios, their CRE assets for NOI. What a build-up this has turned out to be. Today, we are showcasing the prominent CRE asset management solutions that help you keep your assets, your commercial real estate assets, profitable and excellent. So it's a great opportunity for these competitors that are on the call today and will be part of this conversation to come together in an act of healthy cooperation to create awareness, accelerate innovation for this sector. And kudos to every one of you for leading a spirited campaign leading up to this day. I'm quite excited to kickstart the conversation today, but before we start with the conversation, I'd like to take a few minutes and introduce what PropTech Buzz is about. Real estate is one of the largest industries in the world, worth over $400 trillion globally. Yet PropTech's digital layer is still incredibly early relative to its potential. Thousands of innovative products are built across property management, construction, infrastructure, leasing, and the likes, but most buyers still struggle to discover the right solutions efficiently. That's the problem we're solving at PropTech Buzz. We are building the world's leading B2B ecosystem for real estate innovation, where professionals can discover products, connect with industry peers, engage in discussions, and attend events. Also hire talent, learn, and grow together. PropTech Buzz is building the world's first true super app for global real estate innovation. We combine multiple ecosystems into one connected platform, an Amazon-like marketplace for global PropTech solutions, a Reddit-style community where real estate professionals engage and collaborate, an angel-list ecosystem connecting startups and investors, a Cvent-style event infrastructure for global industry events, a Business Insider-style PropTech media network, a LinkedIn-style recruiting layer for real estate talent, and an educational ecosystem for industry learning and upskilling. Our goal is simple: to become the operating system for the global PropTech ecosystem. And we stay true to that mission because we are globally number one for PropTech news, and our readership has widened over the past few months. We are building everything with love. You cannot build anything impactful without putting your heart and soul into it. And that's why we are putting every effort into building this ecosystem to fill the missing gap to improve PropTech adoption. And if you would like to get on PropTech Buzz, you can actually go to proptechbuzz.com on web, but we are also on mobile. So you can scan the QR code either on App Store or Play Store so you can get into interacting with the products. We have a few products that we'll be speaking about today. You can also get on the category portal and engage with them. I'll show that very briefly soon. So I mentioned how PropTech adoption is slow. One of the reasons is because the market is incredibly fragmented. PropTech is about 1% of its biggest asset class, real estate. So this is our mission to grow it. And just so you can understand what we're saying, this is just an example of some of the categories that exist in PropTech. So we are trying to organize these categories. That's why we are launching different categories. And today we are doing CRE assets management. But very soon we'll be doing flex space. And what flex space is just revolutionizing how storage spaces are managed and monetized. That'll be coming up very soon. I think you should pay attention to that. For today, the CRE assets management category is launching today with participation from Redaptive, Predict AP, Emogate, and Attest IQ. Would also like to acknowledge C Stuff because they're a participating company in this launch, but they won't be part of the conversation today, but their product is also live on the category portal. We have an AMA currently running for the conversation. So if you want to send in questions, you like to engage with some of these leaders, you can still do that. It's still on right now. I would show you very quickly in a moment how you can do that. But please be part of the conversation. If you have any questions for them, you can send it through the AMA live on PropTech Buzz. So I'm going to be unveiling our category portal now with these leading providers. Just give me a second. I'm just going to click this link and then we should be. Okay, so this is the category portal on PropTech Buzz, the category portal for CRE assets management. To get here, you can just click market. Once you go to proptechbuzz.com, click marketplace and click CRE assets management. And it has everything that has to do with this category. You can see a buyer's guide, which just gives you information about what to look for when making a buying decision in CRE assets management. You can also see everyone that has followed this category. And by the way, everyone that has followed this category will be able to get real-time updates on what's happening within this category portal, especially when conversations are ongoing as well. You can see who the leaders are. You can see the products that are in this category. So you can click on any product and you can find the information about them. You can see images, videos, and then some reviews as well from actual customers of the products. So, and below that, you can see videos and then articles if you want to widen or deepen your knowledge on CRE assets management before you make a buying decision. I mentioned earlier that we have an AMA running. So if you click on this, you'd also see the conversation ongoing. You can drop more questions. You can answer some questions if you want to, and we'll be able to take some of them before the end of the conversation today. So this is still on. All you need to go to get access to this, just go to proptech.com, click marketplace, go to CRE assets management, and then you'll be able to be a part of the conversation. Thank you so much. So I'm going to go back to the deck now, and then we would run through some other things before we start the conversation. We would like to acknowledge some of the people that have been part of this launch and have done really well. Let's give it up for Predict AP, led by David Stifler. They did a fantastic campaign in the last week, and I've gotten 32 points, 5 reviews, and their page has received over 4,000 views already. And being at the top of the category portal, we get them more eyeballs. So massive congratulations to David and his team. Would also like to acknowledge and raise a toast to Scott Openlander, founder of Attest IQ, for being the most engaged founder during the campaign. I don't have to mention about the power of founder brand in today's business. People trust people more than they trust companies. And when a founder puts their name and face and voice out there, it humanizes the brand, it brings credibility and emotional connection. So kudos to Scott. He has contributed with 2 comments on the EMA so far. I'd also like to mention that there's a chat room on the app that brings together all the followers of CRE assets management. So we are creating a private network of leaders in this category where you can stay connected and collaborate. So we'll be including more property management CEOs and CXOs in the coming days. Just wanted to mention that the category portal is not just a listing portal. There's conversations like I showed you happening there. And this launch is just the beginning. There'll still be activity going on throughout the rest of the year. So now let's transition into the conversation today. I'm sure this is the time you've been waiting for. And today's conversation is centered on how these companies are helping asset owners, asset managers, property managers improve NOI with the portfolios that they manage. So we are excited to have David Stifler, founder and CEO of Predict AP, Emmanuel Coulson, founder and CRO of Emogate, Charlie, I don't know how to pronounce the surname, but Guru, real estate and data solutions sales leader with Aptiv. I'm sure that he'll be able to introduce himself much better than I did. and Scott Openlander, creator and founder of Attest IQ. So I'm just going to be bringing them up on stage so they can give a brief introduction before we get into the conversation today. I'll start with Dave.
Hey everyone, thank you very much. Appreciate this. Definitely have been enjoying talking to folks on PropTech Buzz. The owner-operator side for about 20 years. I'm an accountant by background and geek at heart, and in my role at Colony, trying to make the platform work globally, I came across this issue around AP invoice coding and became so obsessed with it. I left my role at Colony and started Predict AP. So I'm excited to share what we've come up with there. But I always love it talking tech. So if you're on PropTech Buzz, feel free to send me a message there, and I'll talk about it, everything and anything related to tech and PropTech and real estate. So look forward to talking with you all.
That's amazing. Thank you so much, David. So I'll introduce Emmanuel on stage so he can introduce himself as well.
So Emmanuel, I'm a late Immogate co-founder. Before joining Tariq and Thomas, the two Immogate founders, I spent 20 years at companies like Thomson Reuters and SimCorp. And before starting Immogate in 2017, Tariq and Thomas were respectively CTO and CDO at Arcon, the Goldman Sachs real estate investment management firm. And the reason why they started Immogate was to help clients solve their what I would call their data spaghetti plate challenges as they did at Goldman Sachs. So before, as you know, today in real estate organization, rely on diverse data sources, face multiple systems with inconsistent formats, lack of standardization, etc., etc. So today, Immogate mission is to turn our clients' fragmented, non-qualitative data into timely, smart business insights. And we today mainly serve real estate investment managers, companies like Apollo, Swiss Life Asset Management, Bain Capital, and several others. We also have a global partnership with MSCI. So this is Immogate in a nutshell.
Thank you so much, Emmanuel. So now I'll also bring up Charlie to the stage, so he can also give us the right pronunciation for his name. Apologies if I
no problem. Well, thanks for having me here. Charlie Gurwe for Adaptive. I've been here about 5.5 years. We're a 12-year-old company, and what we've done is taking our smart metering platform and introduce the real estate sector, large industrial triple net real estate firms to obtain data, electric, water, and gas data for reporting and sustainability purposes. And through that process, we've helped them engage and align with their large Fortune 500 tenants to unlock trapped NOI through both the physical energy layer savings projects, as well as sustainability ESG initiatives focused more around scope 1 net zero, right? Focusing around removing gas and electrifying buildings. So we have some of the largest industrial landlords, largest tenants that we've helped align. And so from both the sustainability and an asset management front, Redaptive sits at the forefront of delivering value to both those firms. I appreciate the opportunity and look forward to the conversation.
Thank you so much, Charlie. And then I'll also bring up Scott. Please introduce yourself.
Hi, everyone. I'm Scott Openlander. My background is in commercial real estate. I worked for various office and retail REITs over my career in various capacities, including national operations, and always was asked to deal with credit reviews of companies because no one else knew how to do it or didn't understand it very well. The last 10 years, I've worked on developing applications utilizing government data and business data to understand how to automate the rating and standardization of credit risk of tenants.
Thanks, Scott. All right, so I'm just going to bring everybody back on stage now so we can start the conversation. I think everybody's in now. So just to bring context before we get into it, we'll start with defining the category from the different lenses of our product, our companies. Then we'll talk about the product in detail. So just so anyone that's listening can see how they can use it and what the perks are involved in using your products. Then we'll talk about customer examples, value that people have gotten from using our products, and then we'll try to define the future. But in between the customer and then the future, you have the demo videos of the product so people can see live what people can do with these products, not just conversation alone. So I'm going to be starting with the category framing question. I'll be starting with Predict AP here. So I'll start with David. You have arguably the most counterintuitive seats in this category. When people picture CRE asset management technology, they think about dashboards, portfolio analytics, valuation models, the top of the stack glamorous part of it. But you leave at the bottom, in the back end, as I like to call it, in accounts payable with plumbing invoices and all the invoices that come in. But your argument is that everything above you depends on getting that background layer correctly. So make a case for us. Why does net operating income, the master metric of this entire category, actually live or die in how invoices get coded?
Yeah, I'll say to the fellow founders here, they have much more exciting problems to solve than I do. It's a very just tenacious thing that needs to happen, and it's not glamorous, right? This back office automation is not the most exciting and glamorous part, but its fingers touch a lot of the other business, and this is what I found. So Colony Capital, where I was a 60 billion plus AUM company, and we paid hundreds of thousands of invoices a year. And the nature of real estate is high complexity around the entity ownership structure, right? The way these things are owned with SPVs and lots of legal entity structuring leads to thousands of potential entities. And then at the property level, tons of complexity around what coding is. This depends on asset class, right? Office has common area maintenance, retail, you have recoveries, multifamily is different, triple net industrial is different, all that's different, which leads to thousands of permutations at the property level. So you multiply those together and it's complicated. And what I found at Colony is we had this woman, Krissa, been there for 30 years, knew it all. We spent tons of money automating payments and workflow and bank rate, all that stuff. She left and we didn't know how to pay a bill anymore. And then that affects things. It affects recoveries, right? Are we charging what we're doing with our tenants, right? Does it affect that, or maybe on-site asset manager who is doing this and they leave and the new person comes in, learning that affects budgeting, affects how we close the books, it affects reclasses, it affects accounting. It affects. It's very, very important we don't commingle funds, right? And the difficulty is a lot of things were addressed to the mothership. Maybe Colony Capital, but in reality, it's split amongst these 47 buildings. And how do we do that properly? So I recognize this as a very knowledge-intensive problem. The market had plenty of solutions on payments and workflow. And I spent a year looking for something that did this part well, this coding allocation, and not just getting that header information off an invoice number total date, but the hardcore nuanced accounting. I'm sure every one of the founders here is sending invoices to a company, and that company has to figure out, how do I take Scott's bill and split it up 38 ways, right? And get the accounting right. And so that's what I came across. And it just happens, the timing was great, where machine learning was just starting to come out. This is pre-LLM, so it's about 7 years ago. And what we found is that it is a great problem. It's a hard problem. It's very knowledge intensive. But if you do it well, it frees up a lot of staff to do a lot of higher, better value things. And that could be just quicker closes, more efficiency, less risk from turnover, all that. But also we've had customers be able to centralize. And if you think about what AI is enabling really for a lot of real estate, it's getting those on-site folks where a lot of this burden of day-to-day operations is happening. You have to do it because the knowledge is there. This enables that knowledge to come centrally. And then you have that tenant-facing community building activities really be the focus of on-site folks. And so great problem. It's a tenacious, every company has it. And this is a very kind of point solution, and then it's feeding all those downstream operational, treasury, budget, workflow, asset management, property management, corporate FP&A needs in an efficient way. So right time, right place, right problem, and it touches a lot of things downstream, but not the most glamorous problem, I'll definitely admit.
Yeah, talk about perfect timing. And I think this back office part is so important to how people definitely get to calculate and determine their NOI and how to get more efficient in that. You mentioned machine learning, and that part excites me a little bit. So when we talk about the products, I'll definitely look to come back to you and see how you are practically letting that.
Yeah, we've
getting
learned
that
lots
done.
of lessons about it, good and bad. So happy to talk about it.
Awesome, awesome. So I'm going to move to Emogate now, because very similar in how you solve this NOI problem in the back office. So for Emmanuel, my question to you would be, David rather, makes sure that every individual invoice is coded right at the moment it arrives. But an asset owner isn't just receiving invoices. They are receiving monthly reports from every property manager and servicer across their portfolio. And those reports rarely agree with each other. How does pulling all that into one trusted picture change how an owner actually manages performance? And what is it costing owners today who are still doing the olden methods of doing this?
Yeah, thank you, Willie. So yeah, I mean, Steve addressed a critical first step, getting every individual invoice rights. And for an asset owner, that's one part of the challenge. Reality is that the investment managers deal with hundreds of assets, each with different property managers, different servicing partners, different reporting formats, and often different definitions of the same KPIs. So the real challenge is creating one trusted version of the truth across their entire portfolio. And today, the reality is that many investment managers keep spending weeks every month reconciling reports, validating numbers, and trying to understand whether a variance reflects an operational issue or simply a reporting inconsistency. That's highly skilled people spending their time finding data instead of acting on it. So when you automate that reconciliation and standardize the data, the conversation changes completely. Instead of asking which number is correct, asset managers can ask, why is this asset underperforming? And what action should we take? That's where real value and performance are. So, and now if we talk about costing, if one today cost is obviously labor reconciliation, the main one is the opportunity cost of delayed decision, probably. If it takes weeks to trust the numbers, you are managing yesterday's portfolio. So bringing operational, financial, and servicing data into one single trusted model allows investment managers to move from reporting the past to actively managing performance. And that's where we say the difference is between being data rich and insight rich.
That's great. I love that your model takes people from being reactive to being proactive. So that's great. That's great. Thank you so much, Emmanuel. I want us to move to the physical part now. So we're going to bring Redaptive into the conversation. We talked about the backend with PredictAP and Emogate, but Redaptive solves NOI in a different way, right? So you improve NOI by physically changing the building. So, and energy is typically one of the largest controllable operating expense in a commercial building, and there's waste in most commercial buildings, right? So can you define this category from your point of view, where you sit? When asset managers think about portfolio performance, why is that energy layer usually an afterthought? And how much NOI does an average portfolio being trapped in inefficient lighting and HVAC have right now, HVAC?
Yeah, so for starters, asset managers, property managers, their day-to-day is the energy costs of the facility is generally an afterthought, right? You're operating in triple net lease facilities where the tenant is responsible for the energy costs and they solely benefit from the energy costs, right? And their sustainability and ESG goals don't align nor really matter to the landlord in a lot of cases. And so the landlord does have to obtain this data from the tenants, but it's not something that is easy to do, right? Trying to obtain utility bills or connect directly to the utility, that's just table stakes that really doesn't occur in a lot of cases. So Redaptive is able to use the technology that we've had in place for 12 years, right? And now align it with the landlord and tenant relationship by first pulling that data with smart metering, electric, water, gas, straight to Energy Star so that you can suffice the landlord's reporting needs, right? And then now what we've proven out is second to that is Redaptive to engage with those tenants. So you can think of the smart metering as a wedge or a Trojan horse to then start talking to tenants and have conversations that the landlords don't have time to, nor do they actually understand or realize the value, right? And so you have conversations on one end about cost savings, right? Lighting projects, retro commissioning, HVAC equipment, and then starting to discuss the storage, the power problem, right? But on the flip side, you also have the sustainability initiatives, right? Removal of gas. So you have these rooftop units, and you think about the largest footprint of facility types across the US, Canada, UK, et cetera, where we operate in. Those are industrial logistics buildings. And those buildings are becoming a lot more sophisticated and energy intensive. And the largest tenants in the world are stating that they need to remove this gas scope 1 emissions by 2040 or by 2030. And the misalignment between the lease and who's going to spend the capital is where Redaptive has come in and helped solve. And the beauty of it is Redaptive has the capital, Redaptive has the project management, the verification through smart metering, and the relationships built on both the landlord and the tenant side. And so over the last 4 years, we've been really focused on the landlord piece to help them with the first step. But through that, the engagement has become natural. And what's a great thing for us and really the moat around our business is AI can't solve it, right? AI helps take the data and it helps do quick analytics to spark conversation, but it's really a very, very nuanced conversation around the type of strategy the landlord has. Is the tenant going to stay or go? How much lease term is left? What region is it in? And what goals do the tenant have? And so Redaptive acts almost as a couples counselor between landlords and tenants to have these conversations on both ends of the lease to align and untrap NOI, whether that's through longer leases, higher rents, lease extensions, or reducing the overall costs of operating a facility. So we're really excited about where we're at this point in time to continue pushing the ball forward.
Awesome. Thanks, Charlie. I would like to learn more about the smart metering, how that's the engine you're using to improve NOI properties you work with. But you talked about tenants, you talked about landlords. I think the next person we have on this panel can speak to the tenant side to some extent. So I'm going to be inviting Scott to talk about how Attest IQ are doing this completely differently with the tenants in mind, and why is verified tenant data the missing piece of asset management in your own opinion?
Thank you, Annie. So Attest IQ is trying to solve the main problem of even with public companies, but 99.99% of companies are private. There's only 6,000 or 7,000 U.S.-based public companies, and 8 or so million with full-time employees, and another 30 million that are micro companies in the U.S. So, private companies are very difficult to get accurate data on them. And what Attest IQ does is use government filings for verification, credit indicators, firmographics, and be able to understand the underlying industry of tenants. So it's accurate, verified, and timely data on the entire business population. So you can automatically get business intelligence and a risk assessment on any company on a firmographics basis, or if you're able to get their financials, sometimes tenants won't give their financials, you can get their financials. You can measure that company's financials against a government-based peer group of their industry. And I'm talking about the whole population. So hundreds of thousands of restaurants, you can base your restaurant deal against their peers. So it's not sampled or survey data or a skew of the actual peer group.
Thank you, Scott. And I think this is a very well-rounded framing of the category. And now I think we can go into the products themselves. So circle back to Predict AP, and I want to ask this question to Dave. So Dave, you've talked about how invoice coding is so important. It's a back office boring thing that's so important to how NOI is more efficient for asset owners, asset managers. So for everyone watching who's never sat in an AP seat before, what is invoice coding, first of all? And why did it resist automation for so long that you had to really go into it and then use this machine learning change that eventually cracked it? And if you can give more details to how that you eventually solved it with machine learning.
Yeah, no, I appreciate that. So a lot of people haven't experienced the joys of invoice coding. It is again not the most glamorous thing, but it's very difficult. And think about this: if you're any one of us on this call could jump into an AP role on day one, we'd be able to look at an invoice and understand, hey, there's an invoice number, there's a total, there's a due date. And I'll see this very quickly on the demo we have. What's difficult is there's a very counterintuitive part of this job in reality, which is on the paper, it's going to say something, right? It may say Boston Properties, BXP, as the, who it's billed to. It's generally going to bill to whoever signed the contract. The reality is that's not who's likely to pay it, right? The reality is it's going to be based on different situations, the entities, the properties, the SPVs. So there's many options. And the only way to know that is to pull up history and try to understand the nuance of that. And this is where it becomes a very knowledge intensive problem. And so real estate just generates a lot of activity, everyone from the people mowing the lawn and cleaning the lobbies to, fixing things, building things, CapEx, all of that takes work. All of that generates invoices. All of those need to be paid. The majority, we did a survey, and the majority of what's hitting the ledger starts from the expense side. And none of it's very straightforward. The vendors don't know how you want to code it. They don't know what your lines are for expense and capitalizing it. So it's not that invoice number, total, due date data, and the market had solved for that. This is where software vendors sometimes don't understand the pain. OCR, optical character recognition, or templates, or robotic process automation all solve that header problem of invoice number, total, due date. They don't solve when the invoice says one thing, but in reality it's something else, and it's very complicated, right? I like to give the analogy of, like walking into a coffee shop and, you could order off the menu. It's great because you're telling them, but it's that nuance. And if you go in on a Monday morning and, and Charlie has a favorite coffee shop and they see him and Charlie gives him a nod, they know what he wants. They know his usual, right? Because it's reading the context of the situation. And that's what a lot of this coding is all about. It's reading context. It says one thing, but it means something else, right? That nod means I want my latte, right? And that's what invoice coding is all about, is understanding context with thousands of permutations. And that takes months and months, if not years, to learn, which is why it's hard. And it's a high knowledge, low pay position, which means turnover, which means that new person has to start learning what the nod means, and all that. And so that's why it's a difficult problem. And again, it's feeding so many downstream things, from recoveries to, reporting and accounting and all sorts of things. And that leads to problems if you have this constant turnover and kind of a critical knowledge-based position. So invoice coding is complexity at its core.
That's awesome. So if I were integrating Predict AP, your machine learning model would understand this context and be able to execute it. Is that correct?
Yeah, that's the point. Is I didn't want to have. I did not go out to start a company, so I started to go find a solution. And one of the methods is a robotic process automation with UiPath or template-based approach. And so I thought, we'll start building rules. We had 30,000 vendors, and what I realized was this is a very static way of doing something, where you say, if you see this, do this. So 30,000 vendors, 12,000 entities, lots of accounting nuance. It leads to hundreds of thousands, if not millions, of permutations. And so a few months into this, I realized this is not going to work. What I needed was something that would figure out the rules on its own, and that's where the machine learning works. And I say machine learning and not LLMs specifically because there's reasons LLMs aren't good at kind of what we call deterministic, consistent problems where the same input gives you the same output without variation. And we've kind of this lessons learned in that. But every time someone has paid a bill in a company, they've created good data and they've created structure and they've created learnings. And so that's what we do. Take all that history, build a model for customer specific. We don't train broadly, we train customer specific. Invoice comes in, We know it based on the history and when things change, because every day, when you sell buildings, you buy buildings, it changes. We take that final approved invoice. Every single invoice feeds back to retrain the model and keeps it optimized. It's a perfect little feedback cycle. You have good structured data, there's patterns, and there's a feedback mechanism because you need to have a person reviewing payments. And so we know when things change. So that's how the machine learning works. It figures out the rules just like a new employee would look at history to figure out the rules.
Awesome. Thank you so much, Dave. So I'll move to Emmanuel now. We are also solving this with AI, but we are zooming out from the invoice level to the reports layer. So I want to ask you now, walk us through how SmartGate, your product, how does it do this? How does a pile of files that don't match become one set of numbers that a CFO can sign up on? And what happens when those numbers are wrong?
Thank you. That's exactly the problem our clients face every month. They do not receive one standardized report. They receive hundreds of files from different property managers, asset managers, services, different templates, different formats, different jurisdictions, sometimes even different definitions of the same metric. So we sit in between our clients, the investment managers, and their services. We connect their services to the platform. The services drop the files to connect to the platform, and the platform will automatically transform, validate, and integrate the data. So our platform acts as the intelligence layer, I would say, in between those services, operational reports, and our investors' investment platform. First, we, as I said, we automatically ingest and understand every document, regardless of the format. Then we normalize the data into a common data model and apply a comprehensive set of business and financial validation rules that are embedded into the platform. But validation is really the key. So we do not just extract numbers. We ask whether those numbers make sense. Do they reconcile with previous periods? Are they consistent across reports? Do they align with accounting rules and portfolio definitions? Are there unexpected variances that require attention, et cetera, et cetera, et cetera? So when something doesn't look right, of course, we don't hide it. We flag the exception, explain why it failed, the validation, and route it to the right person for review. Objective isn't to automate everything blindly. It's to automate everything that can be trusted and focus on human expertise only where judgment is needed. Once those exceptions are resolved, the owner has one single, consistent, fully auditable view of the portfolio. And that's the point where a CFO or an investment manager can trust the numbers because every figure is traceable back to its original source. Every transformation is transparent, and every exception has been managed. And that's where the real value begins, meaning that instead of spending the first 2 weeks of every month asking which spreadsheet is right, they can spend time asking why is this asset underperforming? Which manager is outperforming? Where should we deploy capital, etc. In other words, we move from reconciling data to managing performance. Back to the question, your previous question.
That's great. So it's a no-brainer for me. As an asset owner, this makes a lot of sense. So my question would be: can any asset owner anywhere use SmartGate, or can you just give some context to that?
Absolutely. I mean, the platform. So today across the globe, we are already connected to 300 plus services. Again, loan managers, property managers, asset managers, valuators, name them. So it's very, very fast to connect to the platform and to receive the data from those services, you being an asset owner, an investment manager. So we are completely jurisdiction agnostic. We can deal with any data model, any chart accounting, any data model. So the answer is yes. Anyone could benefit of this data refining platform, I would say.
All right. Thank you so much, Emmanuel. Thank you for that context. And I hope this is any asset owner or asset managers listening to this can definitely see that this is available for them to use. So I'm going to zoom out again into the building, or zoom into the building. So I'm going to ask this question to Redaptive now. There's something I saw while I was just doing some research about Redaptive, and it says we upgrade your building for free, and that sounds amazing. So can you walk us through it as an owner signs with Redaptive? What actually happens from the first conversation to building, running your equipment, and just give us context to how that works.
Yeah, the we upgrade your building for free is a very simplified version of it, right? Essentially, I could see that, but we look at it a little differently, right? So there's different technologies that fit under that stack, right? You have, of course, lighting, you have HVAC controls, commissioning, right? And a lot of times, most of the times, HVAC is more resiliency, right? It's not necessarily a savings, it's more of a CapEx avoidance, right? And then you have solar and storage. So if you think about all those, right, there's either the positive side where you generate energy, and there's the delta between the cost, right, and then the cost and what you're generating. And then on the other side, there's the cost of upgrading or retrofitting a facility and the savings, right? So what Redaptive does is we help scale and accelerate through energy as a service, right? And what energy as a service is Redaptive essentially funds these projects, enables the execution, the project management, and then allows smart metering, electric generally, to measure and verify those savings, right? So it's not just pie in the sky guessing of those cost savings. It's actualized through our proprietary technology, or in a lot of cases, they'll be third party if they're not using our specific metering. And so with that, we see that creating ambitious goals to meet these cost savings or these sustainability initiatives is not the problem. It's the actual capital and it's the execution, right? The technology's been here for quite some time, but our founders come from a banking financial background, and they were able to really unlock that, hey, it's not an issue of site by site. It's more of the large picture to accelerate and the lack there of capital and verification to do so, and the ongoing maintenance of these measures that are installed. And with all of that, you get an off-balance sheet execution, right? So the financial accounting treatment is very attractive to large-scale organizations who don't have to put these projects on their books, and it doesn't hurt their future borrowing capacity. So the moral to it is why would you spend your capital on non-revenue generating equipment when that's Redaptive's core competency, and we can take that off of your plate and you can focus on what you do as an organization. So all of that, yeah, you could synthesize that down to we'll upgrade your building for free, but it's not just your building, it's your portfolio. And that's where Redaptive really makes a difference, is across the portfolio to ignite these opportunities for our clients.
That's amazing. Thank you for bringing so much context to that. And just to give a tip to anyone that's listening, in the demo video for Redaptive, you actually see real customers give actual examples of how what he's just explained actually has worked for them. That's the next layer of questions, but so let's give a tip for that for anyone that's listening to Charlie and is interested in Redaptive. So I'm going to zoom in again to the tenants, and this question is to Scott. So the way the Attest IQ works, you build it on a different foundation. Government fields data where misstating numbers has real consequences, because today the financials usually come from the tenants themselves. So walk us through how that verified layer works, and what changes about the reports that owners get using Attest IQ.
Mm-hmm. Yes, so we have two levels of risk or business intelligence or underwriting. One is to get firmographical information on the company, like its size, age, industry, geographic location, all those have great bearing on the long-term success and outcome of a company. And then the second level is if when you do get financials of a private company, you're able to do a world-class benchmarking against all other businesses, because we're using IRS data, aggregated IRS statistical data on IRS business tax filings. In terms of quality of financials, when getting financials from a tenant, you should get a business tax return or audited financials ideally. If you're not getting verification of financials from a third party, it's quite possible the financials are not truly reflective of the company. But that being said, we still have statistical outcomes of companies given its firmographics based on government tracking of all firms in terms of survival rates based upon age, size, et cetera. And so when you get those financials, you can look at those against their industry peers. You can know not if they're better or worse than the average of their industry group. You can know the orders of magnitude or the exact percent ranking within the distribution of all companies, how good or bad they are. So you can see if their rent to sales ratio is in the bottom 20% and well underperforming, or it's in the top 80% and very strong. Its revenue is generated significantly more than the average given its rent expense. And that's really, in a nutshell, what a Test IQ does. It does instant underwriting, gathering of information, underwriting, uploading, spreading financials, comparing those financials to industry data generated by IRS tax filings. So it's comparing the company against the whole population of its peer groups as well. And then it's been trained in credit analysis and ratios and types of statements in terms of risk level for up to 40 different ratios. So it'll auto-generate for every ratio where it sits and what does that score mean in terms of quality of that ratio and an impact on the company's performance. And then we aggregate all those ratios together into an overall holistic score where you understand the pros and cons of the company in terms of financial risk. We have automated securitization recommendations based upon the risk and the lease deal structure and their financials and industry. And then we also basically will also provide an overview of how that lease deal will impact the overall property value. Will it enhance the value or maybe decrease it if it's a high risk tenant?
That's amazing. Thank you so much, Scott. So for this round, we're preparing to move into the demo videos. For this round, I'll just throw the question open, and I just want you to bring your different contexts to the question. So regarding ROI, what expected ROI people are looking to expect when they use PredictAP or SmartGate or Redaptive or a Test IQ, or maybe some customer examples that you have in real terms. You can throw some numbers in there as well, so people can actually visualize how this would improve their portfolio. And this would be a way to just water the ground for the videos that we'll get to watch in a moment. Does anybody want to start?
Yeah, I'm happy to start quick on our ROI is huge, right? And so if it's pure time savings, we had a recent case study with Paths. Paths is a Nuveen senior company, and they were doing a big reorg. They had estimated about $20 an invoice total cost, all labor, all in, and post us. It was great because we wanted to get these figures. We had them figured out before us. They had to figure it out after us, and they're about $8 after, and resulted in year one saving about $500,000. And we were very, very small investment relative to that. So the ROI was, year one immediate. But most folks are probably spending around $20 an invoice, and about 10 to 15 of that's in-house labor figuring out the problems. And so, I think that's a good point. And check out the case study on predictap.com to check out the past case study on that detail.
Yes. So there's also in the comments, there's also a link that you can also check out. All right. So anybody else wants to?
Yeah, I can on my side. With energy as a service, right? The ROI is instantaneous, right? You're out of pocket nothing, and you're saving right away. Okay, so the ROI is instantaneous, and you can choose the term in which you contract. You can save more and do a longer term, hence maybe a little bit higher interest, or you can reduce that to break even, but less interest and be off the hook of the contract sooner. So that would be on one end, and on the other end, for our tenants, for companies who would choose to use their own capital, right? It would be an NPV avoidance. So it would be, rather than using your capital today on this, spend your capital on more attractive investments, and Redaptive will help you. They'll ask for, hey, I want a 15% plus NPV avoidance on, spending my money for this upgrade that's resilient, right, to meet initiatives, or use Redaptive's money, which we can see large tenants, seeing a 70% NPV avoidance on working with Redaptive. So it's kind of a loaded question, but instant ROI when you have lighting or solar or HVAC controls, retro commissioning. But if you have larger resilient boiler, chillers, electrification, it's a NPV avoidance, right? So both complicated, sophisticated, but that's where, each real estate owner, each tenant's different and how they digest, return on investment.
Thanks, Charlie.
I can share a concrete example from one of our clients, an investment manager running tens of billions AUM in real estate. And what they tell us is that before using SmartGate, preparing the monthly investment committee pack was a major effort. 3 full-time people spent their time collecting data from multiple services providers, validating, reconciling, correcting, consolidating everything into a single view. It typically took them 4 to 5 weeks before management had a set of numbers they were confident presenting to the investment committee. That meant that by the time the committee met, they were discussing a portfolio that was already a month old. So after implementing SmartGate, reports were automatically ingested, standardized, validated. And today, that same investment committee reporting process takes 2 days instead of 4 to 5 weeks. So the 3 people haven't disappeared, as they've been redeployed to much higher added value work, analyzing performance, investigating exceptions, blah, blah, all the things. But the biggest success wasn't getting the reports faster or reallocating people to more added value tasks. It's that the investment committee now spend its time discussing strategy. They can identify underperforming assets earlier, challenge assumptions with confidence, and make decisions while there is still time to influence the outcome. So this is sometimes hard to put very detailed figures, but the reality is that in today's market, this is definitely a genuine competitive advantage to compress the time between a business event and a management decision. So that's an example.
Yeah, 4 to 5 weeks to 2 days is massive. All right, Scott, do you want to add anything before we move to the videos?
Yes, sure. So with the test IQ, reports can be done in minutes versus, if you have internal resources doing these reports, it might take them 4 hours, or you might have to wait a few days to get an answer. So you go from minutes to hours of someone you're paying a good, healthy salary to with benefits, or full-time credit analyst department. So we could probably, a full-time analyst could probably do at least 10 times the amount of reports or more through this platform. Instead of doing all that manual time, they could focus more time on asking more sophisticated questions of risk. Or If you're an asset manager, this is very easy to use. You don't have to be a credit analyst to use it. You could run your own deals when you want and provide an answer. And you can respond to the deal instantly versus waiting days, several days to get back and answering, the tenant's rep if the deal's good and is there any other credit modifications that you need. So it's significantly faster and cheaper in terms of pure cost. But the one thing it's harder to measure is the long-term benefits, improvements to ROI. If you save, you avoid one bad lease deal, it's probably worth 10 years of buying these reports.
Thank you so much. So just before we go into the videos now, I just want to say again, these products that we are having these conversations about, you might be interested in them. You have some links in the comments. It's also live on PropTech Buzz. So if you go to the category portal, just go to proptechbuzz.com, and then you click on Marketplace, CRE Assets Management, you can scroll down and see the products that are listed here. You can go to the website links, you can view the images, and you can get some more understanding on it. If you have any questions, the AMA is still on, so you can drop questions in the AMA. Thank you so much. So I'll just move straight to the videos now. We'll be starting with, just take this off. We'll be starting with Predict AP's video. After the video, we'll take an audience question.
Here's a quick overview on how Predict AP can help your AP team streamline their operation and scale through consistency and accurate coding. This is your dashboard, which you will use to manage your exceptions. Other than that, your workflow will remain the same. I will drop a few invoices now, and Predict AP will take 40 to 45 seconds to fully code these invoices and push them to either your Yardi or bottom line for the approvers to review. Let's review the invoices that came in. For every invoice, we're going to grab all of the header information as well as the details. All of the fields are going to mirror your current behavior and coding logic. In this example, this invoice, as you can see on the image, it came in through the read, right? But nowhere does it say how it should be split among our different set of properties. By understanding the historical data and behavior that we use to train the model, we have learned that this particular invoice should have been coded on a 50-50 split between these two set of properties. We're going to apply that same logic and context, even if it was by consumption, square footage, or a different percentage split between different set of properties. Another example that we have here comes from our IT vendor, which sent us an invoice with 4 line items. By understanding the context and your coding logic, we predicted the invoice with a consolidation of 3 line items into one GL for the hardware and another GL for just the software itself. Now let's go to our exception management queue. Our exception management is actionable. So when you click in one of these exceptions that we have here, it is going to tell you why it was held back and what you should do to fix it. We have a couple of different examples. As you can see, we have not an invoice, which means that it can be supporting documentation or something that shouldn't have been processed. And we're still going to hold it for you to review it and make sure that it doesn't need to be processed, right? If you're using POs, we're going to flag something that has a missing PO within the invoice so you can actually address it. Right there at the top, it is telling you that there's no PO associated to it and the PO field is empty, right? Now for low confidence, this usually means that there's an issue with the vendor, right? This could, for example, mean that the vendor does not exist within your system, right? Or maybe there's some sort of certification that has expired and needs to be updated within that database in order for us to be able to push it through your system. Last but not least will be your failed bucket. This is where we're going to be holding the duplicates for you. In this case, we flagged and held back an exact duplicate for you to review it, right? That we have previously seen. This will allow you to review it and make that final decision whether you want to approve it or reject it. If you like what you saw and you're interested in learning more about Predict AP, go to our website and click on Schedule a Call to book your demo.
But I didn't have to do a
All
demo.
right. Sorry, say that again.
Said I'm glad I didn't have to do a demo.
Yeah. So we have a quick question here. I'm just going to put that up. When a customer goes live, what are the first wow moments their AP team typically experiences that convinces them they're working differently than before?
Yeah, it's funny. The wow moment has changed. I think ChatGPT and Claude have gone. I think it's when the nuanced situation where again it says one thing, but it's a complicated multi-entity split that happens, and the system gets it. Like it's funny though. There 3, 4, 5 years ago, this incredible skepticism, like you guys can never get this. Why it'll never work. Now folks are like, well, you got 999 invoices right. Like they try to figure out why'd you get that one wrong, but I think it's that moment of something they know is complicated and difficult. And, that takes them, a little time to go figure out and research. Once they see it does that. And also I think the learning aspect, right? There's, I think, a part of this where there's accountants downstream who are just tired of telling the people at the start what to do, and they just reclass it. Once they see it actually learns, then they get very excited. And we want to be the absolute best in real estate at coding invoices. It's a very, very narrow, specific thing. And we are the best at that one thing. And so once they see that, they get pretty excited.
Thank you so much, Dave. Okay, so we'll move to the next video now. Redactive.
Managing your real estate resources effectively and meeting sustainability goals means optimizing energy consumption. But you may not have the capital for efforts like LED, HVAC upgrades, and renewable energy installations, let alone the staff and resources to run these projects at scale. Plus, you need to collect data for reporting and measuring efficiencies. Luckily, there's an easy solution. Energy as a Service through Redaptive will help you achieve your ESG goals. Our turnkey solution funds and installs energy-saving and energy-generating equipment. We help you achieve savings faster with speed-to-scale implementation, whether it's for a building, a campus, or an entire real estate portfolio. Our capital funds your energy efficiency upgrades and renewable projects. We manage the entire process, from design, implementation, to ongoing maintenance, so you can spend your time and resources growing your business. Our simple, goal-based contracts take the guesswork out of what to expect. Because we own and maintain the upgraded equipment, you have less responsibility and risk. Once the upgrades are in place, Redaptive's data platform collects and analyzes energy data through smart metering. This asset-level monitoring offers you rich analytics that validate savings and areas for improvements. Accelerate savings by getting more projects done sooner with Energy as a Service through Redaptive, a leading provider. Visit redaptive.com to reshape your organization's approach to energy consumption and sustainability.
Okay, so we have a question here. I think it's broken into two because of the length. Many organizations want to modernize their buildings, but hesitate because of capital constraints. How does the Energy as a Service model fundamentally change the way customers think about infrastructure investment?
Yeah, so as I mentioned earlier, and how the video demonstrates, and I'm happy they were all wearing all their safety PPE equipment in that video as well. So again, creating ambitious goals is not the problem. That's very easy to do. It's the capital and the execution, right? Those two things. So it's either lack of budget or competing budget priorities, or lack of bandwidth and actual resources internally to get projects done. So both of those factors, those variables, the capital and the resources, Redaptive takes that off your plate. So trying to audit hundreds of facilities, trying to get capital budgeted, try to take the time off of the shoulders of folks in each of those facilities who are trying to run the business. Redaptive helps alleviate that, right? And so we'll do that through potentially a pilot, a 3 to 5 site pilot to get the ball rolling. And we build that trust to move into a build, scale, and platform type of client so that we can scale and take the capital constraints out of the situation.
Thank you very much. Okay, great. So now we'll have SmartGate, Immogate's SmartGate.
Real estate investment, an area in which a lot is happening and which is becoming more and more important for investors and investment managers. To make the right decisions as quickly as possible, the right information is needed at the right time. Sounds simple, but in reality, it usually looks like this. Property managers send their data and reports in a wide variety of formats to their investment analysts. Emails, spreadsheets with all kinds of formatting, and all of it from different jurisdictions as well. Really no basis for creating cost and risk-efficient processes or making prompt analyses and on-time decisions. So it's not surprising that investment analysts spend about 80% of their time cleaning up data. But there is another way, with Immogate. By working with Immogate, the focus on performance and returns assessment succeeds, and it does so over the entire lifetime of your assets. But how does it all work? Property managers, asset managers, and many more now send their reports directly to Immogate. Immogate collects, error checks, cleanses, enriches, and standardizes the data in one single business data referential. The cleansed and standardized data, along with other operational and investment files and reports, are then made available to asset managers and investors. With Immogate, property managers offer better user experience to asset managers and investors, who now have access to cleansed and standardized data, as well as marvelous dashboards and great KPIs. With Immogate, business analysts can now focus fully on appropriate risk and performance assessment and make sound and well-timed investment decisions. Fast and ad hoc on-premise or in the cloud onboarding and implementation services are a matter of course for us, as is compliance with all known industry standards. Would you like to know more? Visit us at immogate.com.
I think that last part answers Anandia's question, because someone's asking how to learn more about Immogate. So the website does justice to that. So there's a question here. Once customers have trusted standardized data flowing across the organization, what new opportunities become possible that simply weren't practical before using SmartGate or Immogate?
I mean, business opportunities, I cannot give the answer, but in the way the companies do operate, we were talking before about the wow effect. That means as well, because we have different options on the platform. So we have this data refining platform, which is the core of the platform. Then we have a data warehouse. Then we have some best of breed portfolio oversight reports, dashboard, and we have an Excel add-in integration, an Excel integration. So the very last wow we had from client is that by integrating this clean data pipeline into their Excel spreadsheet and by bundling it and working with it with their AI tool into Excel, they can work much faster, do much more rapid analysis, turn the figures in many ways. So the last wow effect we had was from clients using Immogates and adopting AI thanks to this Excel integration. So that's a new practical way of working with data as an example. There are others, but this is one. I hope I answered.
I'm sure that example. Yes, I'm sure that example is definitely useful to our audience. Just 1 second. So we'll have the final video at Test IQ, but I just wanted to say thank you for staying with us so far. We are moving into the final section after the video, so please stay at the leave. So the video now will go for at Test IQ.
Attest IQ was formed in 2025 to build a fully customizable, automated AI underwriting platform that anyone can use anytime. Private datasets estimate small samples. Government filings capture the full business population for stronger benchmarking and underwriting. A healthy ratio in one industry can signal risk in another. A Test IQ benchmarks companies against upload financials, and a Test IQ instantly benchmarks, scores risk, recommends security, and generates underwriting narratives in minutes. A Test IQ delivers 3 CRE reports: business persona, credit underwriting, and industry health, helping assess tenant risk faster with better data. A Test IQ is the future of CRE underwriting, predicting tenant behavior, rent demand, default risk, and portfolio exposure. The business persona report summarizes a company's firmographic risk profile, starting with an overall stability score and risk band. It then reviews core firmographics, verification signals, industry classification, and products or services offered. The report also shows the score model, key component contributions, sector watch items, and stability support signals. It is a firmographic screen, not a full financial review. The rent demand report evaluates how much demand a tenant industry may create for commercial space. It reviews the company's industry, property type alignment, market demand drivers, employment and business activity trends, and sector-level risk signals. The report helps CRE professionals understand whether an industry is likely to support future leasing demand, face occupancy pressure, or require closer underwriting review. attestiq.com. The report begins by uploading and spreading the tenant's financial statements. The platform organizes the financial data, standardizes the statements, and calculates key underwriting metrics. After the financials are spread, the user enters the company's firmographics and lease deal terms, including company age, size, industry, legal status, location, rent, lease term, and transaction structure. This connects the tenant's financial performance to the specific lease obligation being evaluated. The report then analyzes the tenant's financial capacity, including rent affordability, liquidity, profitability, leverage, balance sheet strength, operating performance, and financial trends. It evaluates how the company performs against key underwriting metrics and whether the lease obligation appears supportable based on the information provided. The underwriting model combines the spread financials, firmographics, and lease terms into a structured credit view, including a risk score, risk band, key strengths, weaknesses, and underwriting narrative. The final sections translate the analysis into practical decision guidance, including security recommendations, lease structure considerations, and key risk factors. Overall, the report turns spread financials, company information, and lease terms into a structured, data-driven tenant credit decision.
Okay, so we have a bunch of questions, but we'll take the question for our test IQ first, and then we'll take another question from the audience. Scott, it says your AI assistants participate throughout the assets lifecycle from acquisition through leasing. How does the continuous intelligence create value beyond simply automating initial underwriting process?
Yeah. So what we can do is one, through manually running reports, or two, through an API hookup, you can schedule periodic reviews of companies in terms of how they file. So, for example, we can see how they file about their headcount over time. You can see if their headcount is increasing or shrinking, for example, and that'll be certainly may dictate their demand for space. If they lost 10% of their workforce, they may not be fully utilizing their space. You also can look at their legal status over time, are in the good standing with the Secretary of State, and other firmographics and risk indicators, credit indicators, and verifications. You can monitor those things, and you can have alerts triggered on those companies that you want to track.
So I believe there's a follow-up question to that. I'll read that as well. When the AI agents generate an underwriting report or risk assessment, is there a confidence score or explainability layer, or is it a black box output an underwriter just has to trust?
Yeah. So there we have two sources of AI. One is a private source that we created, we trained in content with confidence. And then when we also use LLMs to help write that specific private data, there is a confidence level in that LLM that we can provide. So our goal is to have well above 90% confidence in any AI generative narrative that we produce.
Awesome. Thank you so much. So I'll move to the last section. I'll just throw this question openly, actually, because now I want to talk about what the future of CRE assets management from your own lens looks like. For Predict AP, what does that look like when it comes to invoice coding? And with Redaptive, what does that look like? Energy as a service, what's the next level? What are you investing in your roadmap to hit that future that you think is possible within the context of your solution? So we'll talk through this, and then there's one more question as well. It's quite a number of questions. We'll just take one more audience question, and then we'll call it a day. Does anybody want to start this section?
The future?
Yes, the future.
Yeah. So I think with some pretty good certainty, we'll be able to start with forecasting tenants. Are they on a upward trend or downward trend for growth, and also forecasting industries by asset class. So is there going to be more demand for retail space in a given area or less in the next 1 or 2 years, or for office or for industrial, et cetera. And then from there you go to predictive. So predictive likelihood of rent default I think that's feasible in the next 2 years for us to develop. So from those perspectives, and the last thing I think long-term would be predicting tenant behavior. Are they likely to renew or not renew? Are they going to likely need more space or expand? Or when the lease is up, given the market lease rates versus the contracted, is that delta going to impact their ability to renew or not?
Thanks, Scott.
I think the future in our end is it's rather than if energy efficiency or resiliency, cost savings as an elective, it's becoming more mandatory table stakes, right, for the valuation of buildings or the operations of business, and rather than it being a site by site reactive approach to whether on both of those fronts, it's becoming more holistic, right? So looking at all of the portfolio and addressing the top priorities now, but planning out for 5 to 10 years as well. So we're looking at our clients from a portfolio perspective and larger bookings, larger undertakings of planning versus site by site, right? So just like insurance is required to run your business, planning, cost savings, energy efficiency, and sustainability is similar in that as table stakes moving forward. And so I think that's the future, especially as you start to see a ton of building performance standards beginning to now issue real fines for not doing so, to the tunes of hundreds of thousands, right? So that's I think the future, and more to come.
Awesome. Thanks, Charlie.
And for us, 5 years from now, trusted data won't be a competitive advantage. It will be a prerequisite. So just as investors today expect audited financial statements, they will expect the operational investment data behind every portfolio to be transparent, traceable, and trusted before they rely on it or allow AI to take or to make recommendations. So AI is a high performance engine, data quality, and governance are the fuel quality. No matter how powerful the engine, dirty fuel will break it down just faster. So that's why our mission, and this is where we go, is to provide real asset investors with their own trusted, governed, proprietary, sovereign, open, and multi-asset class ready data layer. A data layer that belongs to them, not a software vendor one. one that continuously feeds today business application while becoming the foundation for tomorrow's AI engines. So our mission is clear, and this is where we go. It's let technology handle the collection, validation, reconciliation, and governance of data, so people can focus on creating value, optimizing assets, managing risk, allocating capital, etc. And if I look toward 2030, this is exactly the way the industry will operate. Investment managers won't spend time navigating system and reconciling reports. They will work alongside AI agents to monitor portfolios, detect risk, benchmark performance, etc. So in many ways, we are our clients' future agentic investment management platform for real assets. And so this is what we are. And on top of this, that trusted data layer, we are also building some coming new AI business expert agents. So this is where we go.
Thank you, Emmanuel. I just want to take one more audience question. I think Dave had to leave for scheduling conflicts. I think this also is something he could have answered. But Scott, I think this is directed to you. What's the OCR extraction accuracy rate on messy or non-standard financial statements, scanned, non-templated foreign formats? And what happens when extraction fails? Manual or silent errors?
Yeah, that's a great question. We've trained it on all kinds of PDF and Excel file loads, so that could be really really bad looking PDFs that have been copied over and over and or handwritten. So the degree of the quality of the PDF is the degree of the accuracy of the upload. But however, the inputting in our models are basically the sum totals and totals only to run the model. So you really are only not inputting a lot of information. Worst case, if you have to go in and edit something that doesn't look right. So you have a chance to upload and then edit and then save it to progress through the running of a report.
Awesome, thank you. So we've reached the final part of today's launch. I just wanted to mention again, I'm just going to share my screen one more time, that you can see this product on the CRE Asset Management category portal on PropTech Buzz. So you can take a look at them, you can play with them, you can also reach them, you can drop comments, or you can reach out to the founders themselves directly from the platform. Aside from that, we are also creating a chat room that's for leaders. That's currently live, so would encourage the conversation to go beyond today's talking points, and you can talk about the future of the category and what we can do. Just a quick question: do you see any opportunities to collaborate with each other? Because I see there's some complementary products possibly here. Just a thought.
I mean, I think that the relationships that we all have and aligning those folks, whether they're landlords or tenants, is always a way to collaborate. I think knowing everyone's capabilities and the company's mission is going to, again, align with my landlord and tenant clients. And when I'm together with them, right, we don't just talk about Redaptive for the whole time. We talk about family, sports, other companies, that what they're trying to solve for, and other issues and problems they have. So in that capacity, absolutely. I think understanding more detail around these great companies would help me do so, but the answer is yes.
Thank you very much. Anybody else want to chip in?
Yeah, I would agree with that. I think we use in some ways similar technologies, especially with AI, and that we have different products and verticals. We could collaborate on potentially on how to utilize technologies to better to organize and train data. In terms of an application, I think we would dovetail good in a in working with discounted cash flow models and valuation tools on the financial performance of assets. We could add, for example, aggregate all the risk scores, all the tenants in a building by square footage, and you could see like a portfolio of risk scores, and also aggregations by industry type and risk of those industries. So it could dovetail good into those types of platforms.
Thank you so much, Scott. So Dave, welcome back. I think there was a question. I think your insights might be useful here. So we have
excellent. Sorry, I had some technical difficulties there. Yeah.
No problem. So this question: what's the OCR extraction accuracy rate on messy and non-standard financial statements?
Yeah, luckily, OCR is a solved problem, right? If I had to build this 10 years ago, we would have spent, a few $1 million trying to get OCR to work well. OCR is absolutely a commodity. It's a solved problem. Amazon has Textract, Google has Text Extract. There are a large number of very high quality OCR tools out there that can read sloppy handwritten things that are crooked. And it's part of our process, right? It's the start of the process. And so OCR, again, today is very, very solid, very good. The question is not about that. It's about what do you do with the OCR outputs, right? Again, when the OCR tells you X, but you really know that it means Y, that intelligence layer on top of that is what's much more challenging. And so, yes, OCR. And I had a sales call once where someone, a New York firm, they put me on the spot. I love live demos. They put me on the spot. They handed me like 10 handwritten little paper things, and they're like, we're not going to sign unless you run these right now in your app. And I'm like, it's not going to code because we don't have history, but we put it in and it read it, and that was Textract, right? Not us. But the output of that, understanding the accounting behind it, that's the hard part. But OCR is great right now. It's kind of table stakes and very cheap.
All right, thank you. Thank you so much for everyone for being here, and thank you for being part of this conversation. It doesn't end here. Like I mentioned, the category portal is live and it's there all year round. So you can still go back and check this product. You can ask questions and you can review them. I want to appreciate our panelists. Thank you for taking time out of your busy schedule, and every asset manager, asset owner that joined this call. Thank you so much. So we'll be making promotions over the next couple of days and weeks. So please watch out for them. And thank you so much.
Thank you.
Thanks, everyone.
Thanks, everyone.
Bye-bye, everyone.